ZKsync's been grinding upwards today while almost everything dips hard. It's also quietly stacking wins on the institutional front, especially with that fresh 2026 roadmap dropping in January, zeroing in on bank-grade privacy and real-world scale that could flip the script if adoption kicks in hard. ZKsync is one of the leading zero-knowledge Ethereum Layer 2 rollups, built by Matter Labs to deliver fast, cheap transactions while inheriting Ethereum's security through validity proofs. Launched with ZKsync Era in 2023 as a full ZK EVM, it lets developers port Ethereum dApps with minimal changes, thanks to native account abstraction and low fees that often dip below a cent. The big evolution came with the Elastic Network, turning it from a single chain into a modular setup where anyone can spin up sovereign ZK chains using the ZK stack, sharing liquidity and security via cryptographic links instead of risky bridges. The native ZK token handles governance votes on proposals, staking rewards, piloting mid-2026 with up to 10% yields targeted, fee payments on some chains, and incentives for builders and users. Max supplied $21 billion, with just-in-time minting to avoid treasury dumps. Right now it's hovering around 3 cents. Market cap in the low 200s of millions. Still a top contender in the L2 pack despite the broader pullback. Network metrics show resilience and quiet growth. TVL sits around 30 to 35 million on the main Era chain lately, with bridged assets holding steady and stablecoin market cap in the 50s of millions feeding DeFi and payments. Daily transactions and active addresses remain consistent in the hundreds of thousands range during peaks, while perps and DEX volumes push into the hundreds of millions weekly. Recent 7-day perps around 600 to 870 million, with spikes from trading activity. Proving costs have dropped dramatically thanks to upgrades like Airbender, hitting near zero per transfer in optimized setups, and throughput pushes thousands of TPS with sub-second finality on optimized chains. It's not the flashiest TVL leader anymore, but the focus on quality, enterprise pilots, and private chains means metrics are more about high-value flows than retail hype. Real quick, if you're aiming to trade, check OKX through the link below. Right now, OKX is running a promo where new users can get up to €100 in bonus rewards just for signing up and trading. And if you refer friends, you can earn up to €200 per referral, which is honestly one of the better referral deals out there right now. I wouldn't mention it if it was trash. OKX has solid liquidity, good fees, and it's one of the platforms I've actually used without issues. If you want to check it out, the link's in the description. The 2026 roadmap, unveiled mid-January by CEO Alex Gluchowski, is the big story right now. It shifts hard toward incorruptible financial infrastructure. 4 non-negotiable pillars: privacy by default, deterministic control for isolated performance, verifiable risk management, and native global market connectivity. At the center is expanding Previdium, the privacy engine from 2025 into full bank-grade tooling, letting institutions launch private, permissioned ZK chains anchored to Ethereum's public security, perfect for tokenized private credit, bonds, or settlements where confidentiality is mandatory. ZK Stack evolves into an orchestrated network of public and private chains with native cross-chain liquidity and messaging, slashing bridge risks. Airbender, the post-quantum resistant prover, gets polished for ultra-low costs and high security. The team calls 2026 the year of visible scale, expecting regulated banks, market infra providers, and enterprises to go live with production systems serving tens of millions of users, moving from pilots to trillions in annual volumes. They plan to deprecate the original ZKsync Lite v1.0 early this year, migrating remaining assets smoothly to focus resources on Era and Stack. Vitalik Buterin's past nods to Atlas and Fusaka upgrades, from late 2025 hitting 15 to 30,000 TPS, add credibility, and Ethereum Foundation grants in Q4 2025 keep flowing to ZK Tech broadly. Other pieces are starting to line up here. Institutional traction is building, especially off the back of partnerships that started forming in 2025 and are now moving into real deployment. We're seeing deeper integration with banks, financial providers, and infrastructure players focused on tokenized assets and compliant on-chain flows. This isn't hype stage stuff anymore. It's slow, boring operational work. And that's exactly what serious money looks for. On the tech side, Airbender's post-quantum resistance and near-zero proving costs matter more than people realize. If you're talking about high-stakes finance, settlement layers, and regulated environments, you need security that can hold up for decades, not just cycles. ZKsync is positioning itself for that world, not just for DeFi yield farmers. Meanwhile, the ecosystem keeps shipping. Developer tools are improving, interoperability is tightening, and there's a visible shift toward utility-driven tokenomics. Fees feeding into buybacks, burns, and staking isn't just cosmetic. It's an attempt to tie real network usage to token value instead of pure speculation. That's what separates infrastructure from memes. Short term, we've already seen what liquidity interest looks like. Korean exchange activity and heavy volume on Upbit gave us recent spikes. That wasn't random. It showed that when attention turns on, there's depth there. Add to that the broader ZK rollup market expanding fast, fees collapsing by roughly 99%, throughput pushing past 2,000 TPS, and the leaders benefit first. ZKsync is in that group. All of this points toward an enterprise pivot. Less about short pumps, more about long-term utility. Over the next 3 to 6 months, execution is the key variable. If they hit roadmap milestones, clean light deprecation, real Providium deployments, a functioning staking pilot, and if Ethereum sentiment improves alongside macro tailwinds, ZK could realistically push into the 4 to 6 cent range. That would be driven by volume returning and supply pressure easing through burns. Looking further out, if institutional systems actually go live and TVL starts flowing in from private and semi-private chains, 10 to 15 cents by mid to late 2026 isn't fantasy, especially if real-world asset markets keep expanding toward the hundreds of billions and ZKsync maintains a privacy and compliance edge. But let's be honest, competition is brutal. Polygon, Linea, Starknet, none of them are sleeping. If they pull more liquidity or if a regulation slows enterprise rollouts, ZK could easily slide back toward 2 cents. Token unlocks remain a constant headwind. And if Bitcoin rolls over hard, everything bleeds, no exceptions. So watch the real indicators. TVL growth, transaction trends, developer activity, actual product launches. If updates go quiet or usage stalls, that's your warning sign. High-profile partnerships mean nothing without follow-through. ZK is building the kind of infrastructure TradFi actually needs. Privacy-first, scalable, compliant systems that can handle massive real-world value. If the 2026 roadmap gets executed properly, the fundamentals are there for patient players. Do your own research. Size positions for volatility. Track Providium launches and institutional partnerships. Those are the sparks that matter. Check the link below, and I'll see you in the next one.